Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Health tech company FutureCure Health mops up $11.5 million led by Carnelian Asset Management with participation from other investors. Fresh funds will be utilized to expand access to the diagnosis and treatment of vertigo. Homegrown beer startup Proust records strong growth in FY25 with revenue surging 2.7 times. Also claims to have achieved EBITDA break-even during the fiscal year. Revenue from operations rose 174% to 115 crore rupees. Growth was led by a steep rise in sales volume. Beauty and personal care brand Bella Vita reports a profit of 25 crore rupees in FY25, a sharp turnaround from a loss in FY24. Improvement comes amid strong revenue growth and better cost efficiency. Managed care provider Even Healthcare gets $20 million in fresh funding. Round was led by existing investors Lucky Groom and Alpha Wave. Proceeds will be used to expand its hospital footprint in Bangalore and scale its managed care hospital model. Used car marketplace Cars24 acquires vehicle information and management platform Car Info. This is Car24's second acquisition in 12 months. The acquisition brings Car Info and its other app Bike Info into the Cars24 ecosystem. Well, those were the headlines we've been tracking for you today. Hospitals are among the toughest businesses to build. Capital intensive, slow to break even, and often rewarded for keeping patients longer. But Bengaluru-based Even Healthcare is challenging that model. The company has raised $20 million in fresh funding, more than doubled its valuation in under a year, and claims its first hospital reached operating break-even in under 6 months. So can a managed care model that prioritizes recovery over occupancy build a sustainable healthcare business in India? Joining me now is Mayank Banerjee, the co-founder of Even Healthcare. Mayank, welcome to Startup Street. You've just raised $20 million and more than doubled your valuation in under a year. Where does this capital go next? More hospitals, deeper care teams, or scaling tech-led monitoring and recovery at home?
Hi, Shruti. Thank you so much for inviting us. And in terms of where this capital is going next, in all 4 of the areas that you highlighted. We'd love to build out our hospital footprint, invest a lot more in our preventative care and our clinical team, as well as obviously the tech layer that sits across the entire company and enables everything to work.
All right. You describe Even as a managed care hospital, not a traditional one. In simple terms, Mayank, how is this model structurally different from how hospitals typically make money in India? And how did that help you reach operating break-even in under 6 months?
Really good question. So I think the number one mindset that we have is our doctors that we work with, that we're fortunate enough to work with us as employees. They're paid fixed salaries and they're actually incentivized for good clinical outcomes, not necessarily the revenue that they generate. Now, what this translates to is better outcomes for the patients, better outcomes for our insurance members that we work with partner insurers as well. And overall, what this means is because we already have members in areas around our hospital, if they choose to trust Even, visit our hospital, if they absolutely need to, the hospital gets to break even more quickly, as you've already seen, and our members and our patients get a better experience.
All right. So, Mayank, essentially, our model is designed to reduce what hospitals are usually incentivized, to maximize admissions, long stays, repeat visits. But doesn't that cap revenue growth?
It's ironic to be saying this on a business show. I think we care about patient experience a lot more than we care about revenue growth. We believe that as long as you concentrate on patient experience, more people will come, more people will become members, more people will choose to visit our hospital, and the revenue growth will take care of itself. Maybe that's a terrible answer, but it's at least how we think about things.
No, it's not a terrible one for sure. But, early break-even is impressive, Mayank, but hospitals are CapEx heavy. As you expand in Bengaluru, how do unit economics look at scale? And what's the biggest execution risk, Mayank, you're watching as you move from asset light to asset heavy?
So on the unit economics front, we built the hospital in under 6 months. We've gotten it to break even in just under 6 months. And so I guess from an IRR perspective, as a hospital, we are miles ahead of, let's say, a lot of benchmarks, at least. That's really, really important for us. And I think in terms of the execution risk, it is precisely that, the execution part of it. I'm very fortunate to work with some of the most talented people who know how to build and run hospitals. People like Dr. Chandrika, Animesh, Dr. Benita, Yash is our unit head, and Chandan and Bhavesh, who are leading kind of a lot of the growth side. So very much down to the team. And yeah, we plan to double down over the next 6 to 12 months.
Sure. You just mentioned that you plan to double down in the next 6 months, but how many hospitals are we talking about? Will it be in Bengaluru only, or are you looking at a pan-India expansion? Give us a sense of your expansion plan.
So for the next 6 to 12 months, it will be focused on Bangalore and Bengaluru. Beyond that, we're incredibly excited about doing what we can for patients all over India. We have some plans there. We hope in the next couple of years, 2 to 3 years, we're able to expand from one hospital to maybe 15 to 25. They will be all over the country, and it will be where we have a strong membership base that we can support.
And what about revenue targets? You've broken even in under a year. What about turning fully profitable, PAT positive? When do you think that will happen?
Again, we care about patient experience and ensuring great experiences for our members and our patients. That's what we're concentrating on. As a company, we're in a fortunate position that as long as we stay focused on that, the revenue follows, as do the profits. Part of the reason for this round is investors really believe in how we are doing things. And I think for the foreseeable future, that will be where we are focused. Internally, revenue targets are something that we care a lot less about than how many lives can we improve.
All right. Alongside the funding, even healthcare has also released early clinical outcomes from a tracked cohort across its hospital and care network. Mayank, zero unplanned 30-day readmissions, zero post-operative infections across 350 plus surgeries. Tell us, how tightly controlled is this cohort, and can these outcomes scale across hospitals?
So that's probably the area that I'm most excited about. Obviously, we've been able to get it down to zero at the hospital where we run it end to end. I think one of the things that we have been doing with some insurance partners is actually running this program on some of their portfolio. And even there, we've seen about a 50 to 60% reduction in readmissions. And that's without us running the facility, but it's simply with our clinical team supporting people post-discharge. And that's on many thousands of lives and claims. So I think the bit that we're probably most excited about is not only how amazing our results can be when we own things end to end, but also the kind of impact that we have in partnership with other insurers, and we hope in the long run other hospitals as well.
All right. Mayank, even healthcare has also reported a 92% online revenue retention rate. In healthcare, that's rare. So tell us, what keeps patients coming back?
We try really, really hard for them and try and look after them. I think the average member for us engages with us between 6 and 8 times a year.
Okay.
Which, if I think about my healthcare journey, maybe before even I would have spoken to a doctor once or twice, max a couple of years. And I think that's really the big difference. Proactive care, where we try and stay in touch with our members and our patients and see how we can help them, is something that people seem to like. And once they've tried it, as you said, they seem to renew, which we're super excited about.
All right. Now, let's talk about managed care. It has worked in markets like the US, but India is very different. So what, according to you, won't translate here? And what gives you the confidence that this model can work at scale?
I think the opportunity in India is to do something way better than the US. I think what won't translate here is what I think is a broken US healthcare system, right? Today, India probably has the best digital financial infrastructure in the world. And we hope in the next few months and years, it will have some of the best digital healthcare infrastructure, thanks to the efforts of the Honorable Prime Minister and the various government efforts there. I think we have a chance to build the world's best healthcare system in India, one with principles of kind of patient care and managed care at its core. And that's what we hope to do in the coming decades.
You know, we have the union budget right around the corner. 1st of Feb is coming close. What will be the big ask from the finance minister?
Very good question, actually. I would say that the government is doing a great job. I think continuing to invest in the digital infrastructure in particular. Right now, we are focused on Bangalore. We very much hope to expand, but our biggest success has been combining digital healthcare, which is brilliant for retention and regularly speaking to people in a way that's convenient, but then also saying, if things escalate, if there is an acute episode, we also have the physical infrastructure as well. And I think the true opportunity in India is to do the best things in the world across both the physical side and the digital.
All right. You know, you spoke about how you've built this digital infrastructure as well. So, you know, let me go back to your fund deployment plans. One of the big plan is scaling tech-led monitoring and recovery at home. If you can take us through your tech edge, what is it?
So I'm fortunate that I'm not the person that gives us the edge. My co-founder worked at Google DeepMind. He has a PhD in machine learning. And we have been fortunate enough to work with a team that have worked at some of the, I think, most esteemed organizations in the country and in the world. It's less thinking about it as a standalone tech effort, but rather how can technology enable doctors to do better jobs? How can it enable patients to more easily get in touch with doctors and ensure that even our kind of support teams are able to leverage their own human judgment to 10 times as many people as they would otherwise have to do. And I think that's really how we think about it.
All right. Mayank, before I let you go, one final question. If even healthcare succeeds at scale, what fundamentally changes for an Indian patient, let's say 5 years from now?
Hopefully they're not a patient and they are way less likely to be a patient and actually ever need to go to a hospital. That would be success for us. If you're someone that is worried about your health but finds it hard to keep on top of it, our job is to make it incredibly easy for you and ensure that you can lead a longer, happier life with the people you care about.
All right. On that very positive note, it's time for me to wrap up our conversation. But many thanks, Mayank, for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thank you so much, Ruthi. Thank you so much for having us.
Moving on the hot seat today, actor and entrepreneur Samantha Ruth Prabhu is expanding her business footprint once again with her latest venture, Truly SMA, an affordable premium apparel brand. Speaking to my colleague Shilpa Ranipeta in an exclusive interview, Samantha explains what drives her investments across a diverse portfolio spanning fashion, wellness and food, and her idea behind her second stint with fashion after having launched Saki in 2020. Take a look.
I have so much love for Saki. It was my first ever venture that I invested in, and I learned so much. I learned so much about the fashion space. I learned I was able to engage with a large community of women, and that taught me so much. And with Truly SMA, it's completely different from Saki, and it is a progression in the sense of who I am today. So I would say that about Truly SMA. And I'm excited to start this journey with everything that I have learned so far. Truly SMA is in the affordable premium everyday wear segment. I think what Truly SMA truly stands for is being yourself. And we don't really chase trends. We're about functional pieces that scream quality, and with new age designs that, we bridge the new age designs with quality at affordable pricing.
How involved are you operationally with the day-to-day of Truly SMA, whether it's design decisions, supply chain, marketing, all of that?
Part of everything, and a very, very active part. Every day there's a discussion on what to do better, on customer feedback, on positioning, on future collections. There's always a group that's active at Truly SMA. And
your business portfolio, otherwise also beyond acting, is quite diversified. You have fashion, then you have wellness with Urban Kisan, Secret Alchemist, Gattaca. Then you also have an early learning center. How do you decide which sector or space to invest in? And is there like a unifying philosophy behind all your ventures and investments?
I've taken a step back from just endorsing brands. So whether it's Truly SMA or Secret Alchemist or Acom or Gattaca, I now have skin in the business, which means a lot more responsibility, and I take responsibility for it as well. I am very, very sure that I would like to be a part of businesses that improve the quality of life for those around me. Any sector, but mostly it boils down to the wellness sector, right? So I feel very, very passionate about health, wellness, and improving the quality of those around me. And I think that from a person who did not have so much confidence in herself to now being the person who bets on herself 100%. Like this. So I think that that's the journey that the last 15, 16 years of my life have been, from being a very unconfident girl to now going like in the opposite direction, the opposite extreme of like, if you have an idea and you believe in the idea, then put all of your efforts, your money into that idea and bet on yourself. And I think that's what my life has become about.
Samantha, a large part of your portfolio is wellness, whether it's Urban Kisan, Nourish You, Secret Alchemist, Gattaca. So, has it been your own tryst with health that guided these investments?
It definitely did come from the struggle, my own personal struggle. It came from an obsessive need to get better. So I realized that if I was looking for these products, other people must be looking for these products as well. And that brought me to Secret Alchemist and to Gattaca and to Urban Kisan. So these founders were already working on something that I was starting to get really passionate about. And we hit it off, and it has been a dream run ever since. I am so proud of all of these businesses and all of these founders and how hard they work. They're truly passionate people. They truly have their heart in the right place, and they truly want to build quality products. And I think that's where the sync comes so naturally. I'm working so well with so many different groups that I'm surprised myself as to how well I'm working with all of these founders, touchwood.
You also started a production house with Tralala Moving Pictures, and you already have one movie out and one with Mainti Bangaram is on the anvil. So, what led you to start a production house of your own? How's it been doing? And just trying to understand, is there a gap that you're looking to bridge with Tralala?
I think women in the industry are always looking for more and not getting enough. We're always looking to do more, to do better scripts, to do more fleshed out characters, but that hardly ever happens. And we're always waiting and praying for luck. So I think it was about time that instead of praying and wishing for it, like go out there and do something about it. So hence Tralala, yeah. And Tralala means brown girl in the ring.
You recently spoke about how Tralala will focus on pay parity as well. This is actually something Deepika Padukone also recently took a stand on. So tell us more, help us understand your idea of pay parity here.
Yeah, Tralala will is working very, very actively to, if it's equal amount of experience, it's equal pay. It's as simple as that.
Well, that was Samantha Ruth Prabhu on her latest venture, Truly SMA and more. It's time now to take a short break, but coming up, Arya.ag adds 725 crore rupees to its kitty to expand climate-smart agriculture and its farmer-centric platform. We speak to founder on the other side. Stay tuned.
Well, in what's brewing today, integrated grain commerce platform Arya.ag has raised 725 crore rupees or around $80 million in equity from GEF Capital Partners. Founded in 2013, the company operates across 60% of India's districts, enables farmers and FPOs with end-to-end solutions spanning farm insights, storage, finance, and market access. Now, with this fresh capital, Arya aims to deepen farmer engagement, accelerate climate-smart agriculture, and significantly reduce post-harvest food losses, while also scaling a profitable and equitable agri-value chain. Joining me now to discuss this funding and the company's growth outlook is Prasanna Rao, the co-founder and CEO of the company. Prasanna, thanks very much for your time here and congratulations on that fundraising. Start by telling us about the kind of valuation you raised the Series D sum at and how exactly are you going to deploy the 725 crores?
With respect to the deployment, I think primarily, we are looking at deploying funds to increase the democratization of technology at the farm gate. That would be one of the areas in which the funds would be deployed. Apart from that, I think deepening of our storage-linked services and the embedded finance on storage would be one of the areas in which we would be deploying these funds. The other area that we are clear where the funds would be deployed would be to see how we can connect smallholder farmers and their organizations to buyers at scale, and specifically for differentiated produce.
Okay, and what kind of acquisitions are you talking about? What will the average size of the investment be? Anything already on the radar that you can tell us about?
So we are looking at investments specifically in technology that is affordable, specifically technology that could be used by farmers and their organizations and other small players in the agri ecosystem closer to the farm gate in an affordable manner. So, certain areas that we are looking at specific investments on is on storage technology, which enables farmers and other smaller players to store without the availability of a physical warehouse. So hermetic storage with IoT and AI is one area that we are looking to invest in. Apart from that, Arya has actually deployed the blockchain technology to tokenize the entire storage volume that exists on the platform. We also want to invest in technologies which could enable transactions of these tokens on a blockchain for increased assurance. So these are two very broad areas that we think we would be investing in. But the whole idea of these investments would be to see how we could bring technology closer to the farm gate.
So Prasanna, today as you operate, 60% of Indian districts with 12,000 warehouses, we understand. Where do you expect these numbers to be by, say, FY27, and how much capital intensity is involved in the kind of expansion that you have planned?
So our model is absolutely capital light, and that's what gives us the flexibility to expand without deploying or being capital intensive. We look at warehouses that are already constructed. We have strong tailwinds from various government initiatives which help us access fresh and new storage capacity for agriculture. And hence, when we look at expansion, we've been growing at an average rate of about 30 to 35%, and we believe that over the next couple of years, we will maintain the same rate. This is with respect to our volumes, but you would see a much faster growth with respect to our profits. Past few years, we've almost doubled profits every year. So the idea is to grow profits at a much faster pace as compared to the top line. And with respect to geographical expansion, our thought is that we would be going deeper into the districts where we operate currently. So you would see that while you may look at an increase of about 20 to 25% in the number of districts, it would primarily be further deepening within existing districts to make sure that we have a much more efficient model in operation as compared to just going and straightforward expanding across geographies.
Well, since you speak of financials, you reported 300 crores in net revenue in the first half of this fiscal, profits of about 31.5 crores. What is the full year FY26 and FY27 revenue and margin looking like?
So for as revenue is concerned, we are looking at close to about 600 crores with respect to the revenues, the net revenues for the platform. With respect to the profits, our thought is that we should be looking at a profit of anywhere between 55 to 60 crores in profit.
Okay, in terms of numbers, how many farmers are currently using your climate smart data-led solutions, and what is the target increase, both in farmer count and acreage, say over the next 2 years?
Our thought is that we expand our reach with respect to farmers through the relationships that we have with their organizations, which is the farmer producer organizations. And with the kind of farmer organizations that have come up, we're very, very confident that we should be able to grow this by at least 100% over the next 2 years.
Got that, Prasanna. Finally, you've enabled about $1.5 billion in loans through your partners so far. Post the Series D funding, what is the annual lending run rate that you're targeting? And also give us a sense of how your default rates look like for these loans compared to, say, the traditional agriculture lending that is done by banks, NBFCs, etc.
In terms of the loans, you're right, we enable or facilitate disbursements of about $1.4 to $1.5 billion every year. And out of this, close to about, and which is say, if I were to look at the numbers in crores, of the total about, say, 12,000 crores of loans that we help disperse, about 3,000 crores is done through our own balance sheet, that is our own NBFC. And the whole idea has been to see that we create a model which is risk contained, which ensures that credit is disbursed in a completely transparent manner, in an affordable manner, to the segment that we are talking about, which is specifically the smaller players in the agri ecosystem.
All right, Prasanna, we'll leave it at that. Thank you again for your time here on Startup Street, and we wish you a very happy 2026.